Thank you, sir, and thank you for CBOA for this opportunity. So let's start the session. So shall I start?
Yeah, madam.
Okay, so regarding MSME, we will discuss the topic in the purview of our exam. Yeah. So first we will start with the MSME classification. Whenever we think of MSME and in the exam point of view, it's every time this thing used to be again and again repeated. So regarding the MSME classification. So when you think of the MSME classification, first keep it in mind that we call it as a composite criteria. What does the term composite indicates? Two, like more than one composite, right? So there are two factors. What is this MSME stands for? Micro, small, medium enterprises. So what does this, how will we decide how this micro, small or medium? Two factors are there, mainly two factors, remember. One is investment in like uh, plant and machinery or equipment. Other is based on the turnover. Okay, so based on that we will classify. So one is one such thing is, this is our like if the investment is 1 crore, less than 1 crore, and if the total turnover is less than 5 crore, it will go to micro. And if it is less than 10 crore, if the investment is less than 10 crore and the total turnover is less than 50, it will become a small. And if it is investment is less than 50 and the turnover is less than 250, it will become medium. So one thing you can, for remembering it easily, always remember 1, 10, 50. Always turnover for by hearting, you can think it is as a multiple of, it's a multiple of 5. Okay, 1 into 5, 5. Same like 10 into 5, 50. 50 into 5, 250. So that is how we can easily remember. This is about the MSME classification. Then coming to okay. So coming to the this MSME, always whenever any enterprises they wanted to be an MSME, all the enterprises are required to register online on the Udyam registration portal and obtain Udyam registration certificate. Okay, now for this banks to decide the classification, and for the PSL, priority sector lending purposes, everything will be basing upon this Udyam registration certificate. Okay, for exam point of view, you can remember this URN means Udyam registration number, URC means Udyam registration certificate. Even the retail and wholesale trade will be also coming under MSME services now. Okay, so now the basic thing, eligibility for becoming a micro, small or medium enterprise. Okay, if any person wants to establish this micro, small or medium enterprise, they have to file an Udyam registration online in the Udyam registration portal. If you wanted to be a like a micro, small or medium enterprise, you have to file this Udyam registration online in the Udyam registration portal, and it's based on the self-declaration with no requirement to upload documents, papers, certificates of proof. Initially, you don't have to do anything. You just have to self-declare. And you will receive this URN and URC will be issued on completion. We discussed what this URN and URC in the previous slide. Okay, so this certificate issued on Udyam Assist portal. Now for this informal micro enterprises and all, that if the certificate is issued by the Udyam Assist portal, that will be also treated at par with Udyam registration certificate for the purpose of this availing priority sector lending benefits and all. Then this IMEs with Udyam Assist certificate shall be treated as micro enterprises for the purpose of PSL classification. This you people can try to remember this one point. Why? Because this is a recent change in the past 1 year. IMEs with Udyam Assist certificate shall be treated as micro. Okay, if any question is coming, IMEs with an Udyam Assist certificate will be treated as which category? Means it has to be micro. Then Udyam registration of PM Swanidhi beneficiaries is not mandatory. Then when we discuss of this Udyam, just for the exam point of view, it's 19 digits. Then this Udyam URC details to be uploaded in uh, CBS under CIM 22 option, and URC details also has to be updated in CGTMSC portal also. Other number is one basic requirement for Udyam registration. If it is a proprietorship firm, the Aadhaar number should be of the proprietor. And if it is a partnership firm, it has to be of the managing partner. Okay. And if it is in case of an HUF, it has to be in the name of Karta. We'll now discuss of some of the common guidelines regarding MSME advances. Whenever any applicant is applying for the loan, we are supposed to issue them acknowledgement. And now we'll discuss about the guidelines on rejection of MSME credit facilities. Rejection of applications from SCST customers has to be done by the next higher authority. If any SCST customer is approaching you and you wanted to reject it, means it has to be done by the next higher authority. Okay. Like if the proposal is coming under CAC or MC powers, it has to be done by MD and CEO or ED in the absence of MD and CEO. Okay. Then if you're rejecting any government sponsored schemes, it has to be a proper register has to be maintained. And remember, if you want to reject any credit proposals from of an MSME customer, it has to be with the concurrence of, remember, it's concurrence of next higher authority. Earlier we discussed rejection of applications from SCST customers, it has to be done by next higher authority. Whereas if it's a normal other case, if it's not an SCST, it's just an MSME, means it has to be concurrence. It's concurrence. Okay. Then rejection of any export credit proposal shall be immediately reported to MD and CEO through the concerned wing at HO. Rejection of credit proposals by the branch level authorities shall be recorded in NB 139 package. Okay, then one more thing. If any proposal that is once rejected by an ex higher authority, in any case, if it is recommended again, it has to be placed before the same such higher authority for even if the power comes for a lesser amount, and but still if it is comes beyond in the power of the lower authority also, it has to be placed in front of the higher authority. Okay. Branches are not empowered to reject any proposals originated through Gensamat portal. Okay. Next higher authority is the authority supposed to reject the proposals received under Gensamat portal. Delayed payments. Okay. If any delayed, this is some guidelines regarding the delayed payments by corporates to SSIs. Okay. In all the cases, the period agreed upon between the supplier and the buyer shall not exceed 45 days. Okay, every time it has to be less than 45 days from the date of acceptance or the date of deed acceptance. Okay, so if they fail to make any payment, SSI small scale industries. Okay, so if any buyer fails to make payment, in case any buyer fails to make any payment and all, he shall be liable to pay one like for the delay, they are supposed to pay interest, and that interest will be compounded at 3 times the bank rate. You remember this thing for the exam, 3 times the bank rate. If the buyer is failing to make the payment, it has to be 3 times the bank rate. Then, while sanctioning,
Madam, I'm here only. Tell me, madam. I will enable you. You can unmute yourself. Yeah, madam.
okay, thank you, sir, thank you. I think it got accidentally muted
Yeah,
and I was not able to unmute
yeah,
it.
yeah.
Yeah, okay. So we were discussing about the delayed payments. In case of delayed payments, the buyer fails to make payment, they are supposed to pay compound interest with monthly resets to the supplier, and it will be at 3 times the bank rate notified by the RBI. Okay, so whenever we are sanctioning for limits to large corporate borrowers, that is above working capital of limit of 10 crore and above, we are supposed to keep separate sublimits with this specifically for meeting all these payment obligations and all. So we are all aware that there is MSME Prime Minister's Task Force on MSMEs. Okay, so here, uh, can you just okay, can you people answer that which among the following is or are not the recommendation of the Prime Minister's Task Force on MSME? Option A is achieve a 20% year-on-year growth in credit to micro and small enterprises. Option B, achieve a 15% year-on-year growth in credit to micro enterprises. Option C, achieve a 10% annual growth in the number of micro enterprise accounts. Option option D, 60% of the total advance to micro and small enterprise as on preceding March 31st should go to micro enterprises. Option E, A, and B, which is not the recommendation. Okay, many of you are answering. Okay, we'll discuss the answer.
Some have answered B, some have answered E.
Yes. So the answer is B. That means the other points A, C, and D are the recommendations of Prime Minister's Task Force on MSME. It is like achieve a 20% year-on-year growth in credit to micro and small enterprises. Then achieve 10% annual growth in the number. Remember 3 points mainly: 20% year-on-year growth in credit to micro and small. Okay, then 10% annual growth in the number of micro enterprise accounts number. The earlier one was about the amount. Then one more is 60% of the total advance to micro and small enterprise as on March 31st preceding, like previous March 31st, should go to micro enterprises. So these are the recommendations. These 3 points are the recommendations. Okay. Now we'll discuss again about the guidelines on cooling period. This is a new thing. It's a cooling period and financing to non-willful defaulters. Okay, anyone, this any credit proposal to a borrower who has settled their due with our bank or other bank or NBFCs or financial institution as any part of OTS compromise, they are supposed to, when they approach us, for example, any customer who has done an OTS earlier or with us or uh, any other banks and all. So if they're approaching again us for any uh, advances, like it's about the cooling period that we are supposed to keep. For example, it's depending on the sacrifice amount. So what is the sacrifice amount? It's like what amount that we have sacrificed, and we are considering for this classification. If it is with our bank, means as a percentage of the book liability, and if it is with the other bank, means outstanding. Okay, so remember, if it is with our bank, means we are considering about as a percentage of book liability, and if it is with the other bank, means a percentage of the outstanding. Okay, if it is up to 10 percentage sacrifice amount, means in case of OTS, we are considering a minimum cooling period of 24 months. If it is between 10 and 25 percentage, that means above 10, less than 25 means 36 months. And if it is above 25 percentage means 60 months. So also we were discussing about this cooling period. Okay, now regarding if it is any gold loan to other than agriculture purpose, it has to be kept out of this purview of the additional cooling period over and above 24 months. Remember, if it is gold loan, means a respective sanctioning authority may sanction gold loans up to their delegated power after this cooling period of 24 months, even if the percentage is more than whatever it is. If it is a gold loan, means beyond, we don't have to wait beyond 24 months. Okay, and ED and above authorities may waive the condition of additional cooling period over and above 24 months for exposure up to their delegated powers. No authority is empowered to waive cooling period up to 24 months. Okay, ED and above can waive beyond 24. Nobody is empowered to waive like uh, beyond, like waive less than 24. Okay, and you remember, if any time the return of account or credit card receivables with write off amount up to 10,000 and it is reported as non-willful default in CIC may be ignored after a cooling period of 24 months from the date of settlement or write-off.
Madam, there are two queries.
Yeah, it is about actually fresh financing.
Yeah, that only. And one person has asked what is cooling period.
Yes, sir. Actually, whenever we are sanctioning the loans and all, okay, for example, a customer, he or she might be having a loan with our bank or any other bank. They have settled it for OTS. So they are approaching after a month. We are not sanctioning them. Then we are supposed to sanction them a loan after a cooling period. That is this 24-month cooling period is that time period that we were discussing about this 24 months and all right, that is that period. Okay, so coming to the CMR applicable to existing and new MSME loans with aggregate loan quantum above 10 lakhs up to 10 crore. Okay, so this is, we call it as CMR for any existing and new MSME loans with loan amount about 10 up to 10 crore for determining DOP in addition to the risk rating. Okay, so basically, for exam point of view, you can remember that CMR is a rank scale from 1 to 10, 1 being the best, 10 being the worst. Okay, then so CMR we have to generate through the labs mandatorily, and the charges will be 1,500 plus 500. Okay, in case of now, there is risk rating models. So regarding the risk rating models, there are different risk rating models. Okay, this is also from exam point of view. Please try. It's very easy to remember, but make sure that you're remembering it. Basically, if a loan is up to 2 lakhs, means you are going. I hope you're all aware about the risk rating models and all. Uh, so someone is asking about SSI, it was small scale industries. Okay, so portfolio model up to 2 lakh, loans up to 2 lakh, you're going for portfolio model. And from 2 lakhs to 20 lakhs, you're going for small value model. And 20 lakhs to 2 crore, you're going for manual model. And what is this? You might be confused what these models are for the basic information. Again, you're giving the loans, then you're supposed to risk rate it. There are different models to risk rate it, and these are those models. Okay, remember the model name and up to what amount, which are the models that we are using. Okay, beyond 2 crore, you're using the CIRM model, and if it is 2 to 7.5 crore, you can use CIRM hybrid. Okay, the CBPR, we'll discuss in detail of CBPR in the coming slides. And just for the basic information, for MSME loans above 10 fund based and non-fund based, we are going for CBPR also. External credit rating beyond 25 crore, we are supposed to do. Okay, one more thing. This is also a recent thing. If the in case of downgradation in rating by 2 or more notches, we are supposed to ask 25% additional collateral in the form of immovable property or any approved security as per as per our collateral management policy, which is other than stock, book debts, and movable fixed assets and all. Okay, that within a 6 months from the date of downgradation. Just remember symbol. If it is, if you while doing a further risk rating, if you observe any downgradation more than 2 or more notches, 25% additional collateral to be asked in the form of immovable property. If this is not obtained, means we have to ask. We can charge them additional 1% interest. Okay, then we will discuss about CBPR in detail. That is Canara Bank proposal rating. Okay, so the eligibility criteria for this is all MSME loans for above 10 crore, fund based plus non-fund based. Okay, so exposure to all loans or facilities, including GSLs, all these ECLGS, LGSCAs, all standalone BULCs shall be out of the purview of proposal ratings. BUL, this all these terms we are coming in the further slides also. Bills, BLCs, bills under letter of credit. We'll discuss it in the coming slides also regarding all these GCLs, BULCs, all those. Okay, so BULC facility need not be aggregated to arrive at the eligibilities or applicability for proposal rating. Facility secured fully by our fixed bank deposit, fixed deposit also shall be out of the purview of the proposal rating. So basically, coming to this CBPR, if it is BULC, we can ignore it. Then if it is our bank deposit based on, we don't have to go for it. Okay, so coming to CBPR, it will be applicable in the CBPR will be applicable in the following cases: renewal with enhancement, fresh loans, then renewal or renewal with reduction in limits, which are of the following issues are there means. Then also, okay, if the CARM risk grade of CNR 9, 10, 11, if it is external rating D case account, and if it is a no-go account. No-go means in the last rating of the CBPR rating. Okay, so in all these cases, CBPR will be applicable. Okay, what are the exempted categories for exempted category from CBPR? NP account, then fresh proposals for ad hoc, TOL, and Canada credit support to COVID-19 affected borrowers. These are all accepted categories. And if it is any fund-based or non-fund-based, that is secured by 100% cash margin, exposure under above category will be excluded from proposed exposure while arriving the final exposure of this CBPR eligibility. Even the government accounts, PSCs or PSUs, and 100% step-down subsidiaries of this PSCs, PSUs and all, with 100% guarantee available from government, these are all excluded. Then restructured accounts or proposals will be exempted from CBPR rating till the following period. Okay, which are those following period? Restructure account till the period of 1 year from the date of upgradation of the account as standard. Then account restructured under OTR scheme for MSME, again till period of 1 year from the commencement of the first payment of interest or principal, whichever is later. Okay, then we'll discuss about the external credit rating. This external credit rating will be obtained when the borrowers are enjoying credit exposure for above beyond 25 crore. If anybody is enjoying credit exposure, the party is having exposure beyond 25 crore. Fund-based plus non-fund based of 25 crore from banks or financial institutions, we are going for it. Okay, so we will accept the ratings assigned by the following external credit rating agencies. Two are there: domestic credit rating agencies, and different are there. Like we are considering domestic credit rating agencies and even the international credit rating agencies also. We'll discuss about the different domestic credit rating agencies like CARE, then India Ratings, ICRA, Acute, then Informerix. The international ones are normally we are accepting Fitch and Standard and Poor Agencies Limited. Okay, then we'll discuss some of the guidelines regarding the credit risk rating applicable for MSMEs. Timeline. What is the timeline for obtaining this external credit rating? In case of greenfield projects, that's a very new. Greenfield means whenever it is a totally new, starting from the scratch, respective sanctioning authority may permit time up to 6 months. Remember, 6 months from the respective sanctioning authority can permit time up to 6 months from the date of first disbursement selectively for obtention of external rating. Wherever applicable, you can give a time up to 6 months. Okay, then if the customer has already applied and accepted the offer for external credit rating by credit rating agency, we may permit again 3 months. So remember, if it is a greenfield, and that means greenfield means a new firm that is starting from the scratch, all those things, then we'll give for this 6 months, and normally other scenarios we will give them 3 months. Then coming to the facility rating, it is applicable to corporate loans exposures more than 7.5 CR. It deals with basically this facility rating is applicable for beyond 7.5 CR. It deals with the probability of default and loss given default, 70% to the uh, loss given default and 30% to the other factors. If any account is unrated, we are supposed to externally unrated. We discussed about the external rating beyond 25 crore, right? So if they are unrated, we will charge them extra percentage. Okay, up to 100 crore, beyond 25 to 100 crore, we will charge them 0.5 percentage, beyond 100, 1 percentage. So we told this CBPR is beyond 10 crore in case of MSME, and for the corporate, all those things. It's a pre-sanction exercise. It's a rating grade 1 to 5, 1 being the lowest and 5 being very high risk. It's a no-go. 5 means no-go. Okay. Then coming to due diligence. Due diligence by extra, this most of you might be aware also. Whenever any micro small enterprise who approach our bank for the first time, okay, when they're approaching us for the first time, we will give them this like we are supposed to get the due diligence report. And if it is beyond 10 lakhs, remember, when we have to obtain mandatorily due diligence report if they're approaching first time, and if it is loan quantum asked is beyond 10 lakhs, they're all eligible to be, they are, when they are asking to be covered under CGTMLC. Actually, bank has made MOU with different agencies for due diligence services. Okay, one such is Informerix, CRIF, Acumen, Smera, and all. So you got it. You might be doing it in your branches also. Due diligence report is actually supposed to be received within 3 days. Okay, now this is something very important, that is CGTMRC. Okay, what is CGTMRC? Basically, Credit Guarantee Fund Trust for Micro and Small Enterprises. Okay, I'll try to be slow. Okay, so CGTMRC. Coming to CGTMRC, what is CGTMRC? Remember the full form: Credit Guarantee Fund Trust for Micro and Small Enterprises. So, eligible credit facilities is fund-based and non-fund-based. It will be always remember it is for micro and small, not to micro, small, and medium. Okay, micro and small.
Madam,
what is the?
Madam, sorry to interrupt.
Yes.
Dear friends, if you have any queries, please note down. It can be asked at the end of the session. I am disabling chat because it is disturbing the session. So whatever you want to ask, please note down. We will give another 10-15 minutes at the end for any question answer. Right now, I am disabling chat because it should not disturb the session. Thank you. Thank you, madam.
Okay, I'll continue, sir. So CGTMRC, basically it is up to 5 crore. We can cover up to 5 crore. Then, okay, in case of this RRBs and all, eligibility is up to 50 lakhs. And for small finance banks, cooperative banks and all, it is 2 crore. Even the wholesale trade, education institutions, training institute, training come incubator centers, now they're all eligible to be covered under CGMSC. CGTMSC other guidelines, guarantee cover will be applicable for term loans up to the tenor of the loan. In case of working capital limit, 5 years or a block of 5 years. Remember, for term loans up to the tenor of the loan, for working capital 5 years or a block of 5 years. So always remember, CGTMSC will have a notional second charge on collaterals instead of pari passu charge. Recoveries through the sale proceeds of collateral security to be retained by the bank. for appropriation of dues and all. So any recovery proceedings after this recovery credits from the CGTMSC and all, it has to be remitted to CGTMSC. And if it is any hybrid model and all, there is no need to create any security or charge in favor of CGTMSC by illegal documentation. It's not any requirement like that. Okay. So what we are going to discuss now, you people remember very well for the exam, because this is very recent change as per the circular 175/2024. Okay, so we are aware that CGTMSC cover beyond this 10 lakhs up to 5 crore you're normally doing. So whenever you're doing any CGTMSC cover, when can we waive the CGTMSC? Normally, when a party gives a proper collateral and all. So there are some conditions for a loan, MSME loan, to get the account is eligible to be covered under the CGTMSC. When can we waive it? There are conditions for that. Okay, in normal course, we are supposed to cover if an eligible loan under the CGTMSC and mandatorily and CGTMSC, but some cases we can waive. This is very important. And two ways you have to remember, two classifications are there. One is for a new borrower, and the other is for existing. Separate guidelines, set of guidelines are there for the new borrower and for the existing borrower. New borrower means a prospective borrower. A new person approaches us, then the borrower should provide primary security or primary and collateral put together in the form of vacant land and building, approved securities up to an extent of 125%. Remember, 125% of the sanction limit. 125%. This percentage is very important to remember. 125%. New borrower means 125%. And remember, here we can accept vacant land also. Vacant land can be accepted as collateral to a maximum extent of 25% of the total security comfort. Okay, so here you remember, new borrower means you can accept the vacant land up to 25% of the total security comfort. Approved bank securities like bank deposit, LIPs, NSCs, KVPs, shares, debentures, bonds, etc. can be also accepted. Borrower should be classified as low, normal or moderate based on the latest balance sheet available. All the accounts should be under standard category. Okay, so I told this is for waiving this CGTMSC. If this is if these things are not there, you have to mandatorily obtain the CGTMSC also. Then for existing, just now we discussed for the prospective borrower. Now for the existing borrower, here you remember, instead of 125%, it is 75%. But one more difference is there. Here it has to be in the form of land and building. Okay, and the approved securities, all those things. It has to. It is not land we are accepting. Land and building to an extent of 75% of the sanction limit. Okay. In addition to the security of assets created out of our finance. Remember, in addition to the security of our assets created out of our finance. Again, it has to be up to moderate risk, and it shall be under standard category. Then renewal of limit amounting above 10 lakhs up to 25. Respective sanctioning authority may permit renewal of limit at existing level or renewal with reduction of limit as per delegation of power, even though on previous occasion a fresher enhancement was accorded by next higher authority. Okay, then in case of CGTMSC, annual guarantee fee will be calculated on, in case of term loan means outstanding as on last previous 31st December. Then for working capital, it is present or expected outstanding. Rather, it will be maximum expected amount outstanding. Then we'll discuss about the informal micro enterprises. This is also a new thing. We discussed this in the first slide also. IMEs, they are micro enterprises without Udyam registration due to lack of mandatory documents such as PAN and GST and all. So this their CGTMSC coverage is available for credit facilities up to 20 lakhs. The eligibility of extent of guarantee coverage will be 85%. Okay, and then their guarantee fee will be up to 10 lakh 0.37%, above 10 up to 20 lakh 0.45%. Then creation of primary security is not a prerequisite for obtaining guarantee. For invocation of guarantee, suit filing and legal action is not mandatory. We are discussing about the IMEs, okay? So again, classification has to be updated in BAM 83, option in CBS, handling of credit guarantee coverage, NPA marking, and claim preferment can be done by the way. Okay, then extent of guarantee coverage. Okay, normally to remember this, we will think in a way that, okay, so there are three categories basically: up to 5 lakh, 5 to 50, and above 50 to 5 crore. Obviously 5 crore now, that is a maximum with the listing, right? So the maximum possible coverage CGTMC will be offering is 85% maximum. Okay, normally whom all we will think as a category that need extra support or something in the society, whom all we will think it will be like women of women, then those districts where issues aspiration districts are there, right? Then ACST, then people with disabilities, these are the people we will think who need more support. So such entrepreneurs, this way you can think and you can remember that 85% set certified MLCs, they all will be given maximum extent of guarantee. That is 85%. Okay, and one more category is there: micro enterprise up to 5 lakhs. This is 85%. Okay, you can remember like that. Maximum guarantee coverage offered is 85%. The uh, the category of people who need the maximum support from the society, those category are the people who will be given the maximum, that is women entrepreneurs, MSc situated in the aspirational districts, then set certified MScs, then SCST entrepreneurs, and people with disability entrepreneurs, and micro enterprise up to 5 lakh, 85%. Okay, then you can think in another case, that is again due to geographic and situations, like MSc is located in Northeast region, then Ladakh, Jammu and Kashmir, they all will be given nearly maximum, but not the best. So that is 80%. Rest all the category will be given 75%. You can easily remember like that. Okay, then coming to CGTMSC annual guarantee fee. So it's a bit tricky, but you can remember it. For credit facilities in the slab 0 to 10, 0.37, 10 to 50, 0.55, 50 to 100, 0.6, 100 to 200, 1.6, 2 to 5, 1.35. Basically 5 slabs are there. You can remember first the slabs 0 to 10, 10 to 50, 50 to 100, 100 to 200, and 200 to 500. Okay, so and you can remember the fees percentage also: 0.37 first category, then it is an incremental way: 0.55, 0.6, then 1.2, and 1.35. Then there is, in addition to this, risk-based premium is also there, and on the risk of MLI, 10% reduction will be also given. Okay, I've not added the risk premium and all. Why? Because it will complicate the things more. So it's better to remember the basic things. Then coming to the this, some categories are given annual guarantee fee concession. Okay, so there are three classifications. One is social category, other is geographic category, third is MSc status wise. Okay, for social category means we'll think of weaker section or underserved sessions. There are women, SCSTs, PWDs and Agniveers, they all will be given a 10%. Then the geographical, Northeast region, administration districts, Union Territory of J&K, Union Territory of Ladakh, and for them up to 50 lakhs, 10%. Then MSc status wise, if they're certified means again 10%. Then regarding again CGTMSC, if annual guarantee fee is not paid, a guarantee under the scheme shall not be available. Requests for revival of the account or delayed payment will be considered subject to the following condition. You have forgotten. If you wanted to revive means request to be submitted within the next financial year. Account shall be standard and regular as on the date of submission of request. Claim can be rejected if the account turns NPA within 180 days of the revival. And there should be, you have missed it, right? So obviously there has to be a penalty, right? So the penal interest will be 4% over the bank rate and an additional risk premium of 15%. Whatever is the penalty plus 15% additional risk premium will be also there for the period of delay. Also, whenever the account slips into NPA reporting has to be done on the CGTMSC portal in the subsequent quarter in which account is slipped to NPA. That is as per the CGTMSC guidelines. Bank guidelines are also there. That also we'll discuss. So, as per our bank guidelines, we are supposed to report between 15th of subsequent month. In case of claim preferment, guarantee invocation within 3 years from the date of NPA or lock-in period date, whichever is later, within 180 days, that was CGTMSC guidelines, okay? Guarantee invocation within 3 years. As per our bank guidelines, within 180 days from NPA or expiry of lock-in period. What is lock-in period? That initial 18 months is considered as a lock-in period. Then legal proceedings are waived up to 10 lakhs. Okay, then CGTMSC by claim settlement method in case of legal action, waived accounts and all. There are two ways, but our bank has opted for option 2. Okay, the option 1 is in a single installment, CGTMSC will be giving the amount, but there will be a single shot, they will settle the claim, but there will be reduction of 15%. But the second option is claim settlement will be done in 2 installments. What are those 2 installments? 75% of eligible amount as first installment and balance 25% as second installment. Okay, and the second installment will be normally settled 3 years from the date of, within 3 years from the date of first settlement of first claim. This is opted by our bank. We have discussed about the CGTMSC. Now we'll discuss about the CGFMU, Credit Guarantee Fund for Micro Units. Okay, it is provided by NCGTC. NCGTC is National Credit Guarantee Trust Company Limited. Eligible loans, Pradhan Mantri PM, our PMMY, Pradhan Mantri Mudra Yojana. Mudra loans we are covering under CGFMU. Mudra loans are 3 categories: Shishu, Kishore and Tarun. OD up to 10,000 in PMJDY accounts, they are covered under CGFMU. Collateral free loans to SHGs up to 20 lakhs, including under NRLM and NULM. Then currency of the guarantee portfolio is normally 4 years, base plus 3 years. That means the life of the guaranteed portfolio normally. Loans to allied agriculture activities up to 10 lakh can be covered. Earlier there was rate of interest cap to be covered under CGFMU. Now there is no ROI cap, rate of interest cap. Credit guarantee is available on a portfolio basis and not on individual loan basis. The financial year in which the loan is granted is called as base year. Normally, what is this portfolio basis? In case of CGTMSC, we are doing it as individual level, right? It's not like that. This CGFME is done in a portfolio basis. It's in together, it is getting done. Okay. This guarantee can be invoked after 1 year from the date of crystallization of the portfolio. Guarantee fee. Here it is. Earlier, we discussed in the slab wise in the case of CGTMSC, right? Here it is standard rate 1% plus risk premium on NPA level and claim payout ratio. 1% plus risk premium. There will be risk premium on what is the NPA level and what is the claim payout ratio and all. Fees to be paid within 16 months from the 16 days from the beginning of the year. Then in case of 124 aspirational districts notified, it is standard rate is 0.5%. And standard rate for SHGs in the first year is 0.25. And for the subsequent years, it will be 0.5. Then in case of guarantee cover, first it's a portfolio, right? So first default 3% amount of default has to be borne by the bank. Okay, then out of the remaining 75% cover amount of default will be there. In case of SHGs, there is no first cover, first close and all. Out of the total, 75% will be given. Then maximum cap is 15% of the crystallized portfolio. We told no, it is not a single loan based happening. It's a kind of portfolio happening. That is why these are not for a particular loan, it's for a club, like it's for a together portfolio. Okay, then here the time period for payment of claim is 60 days. Then for CGFMU, there is an online portal. It's Surge, System for Undertaking, Reassurance and Guarantee Endorsement. Coming to CGSSI. What is CGSSI? Credit Guarantee Scheme for Stand Up India. They're maintained and operated by NCGTC. Then it is basically for, it's very easy to remember because we are giving this Stand Up India, so it has to be less than a crore, about 10 lakhs to a crore. That is basic criteria for Stand Up India also. And it is available, guarantee coverage is available in batches, like April to June, July to September, October to December, and Jan to March. Okay, guarantee fee will be paid in the subsequent quarter. So full payment or full or partial disbursement is mandatory for coverage. At least some disbursement has to happen. Then guarantee fee here is 0.85% plus risk premium. Here the invocation period is 2 years. Lock-in period is 18 months. And what is the guarantee coverage for loans up to 50 lakhs? Up to 50 means anyhow it is about 10 lakhs only eligibility. 10 to 50 lakhs, 80% of the default, that is maximum 40 lakhs. Okay, remember 80% of 50 lakhs is 40 lakhs. Then coming to loans above 50 lakh, 40 lakhs plus 50% of the remaining default. That means normally beyond 50 means 50%. 50% of 50 is 25. We know that up to 50, 40 is the eligibility. So 40 plus 25 is 65. Then Meghalaya credit guarantee schemes. That is here 95% will be provided by CGTMSC and Government of Meghalaya. Assam credit guarantee scheme. This is coverage 75 to 85% by CGTMSC and balance 25 to 15 by Assam, and total coverage will be 100%. Coming to credit guarantee scheme for startups, managed and operated again by NCGTC. Scheme is in force from 6th October 2022 to provide guarantee up to a specified limit to finance eligible startups. Eligibility criteria, it has to be a startup as recognized by DPIIT as per the Gazette notification. startups that have reached stage of stable revenue stream as assessed from the audited monthly statements over a 12-month period. And then standby credit facilities for MSEs, quantum for low or normal risk-rated accounts up to 20% of the sanction limit, the delegated power, whichever is lower by respective sanctioning authorities. Okay, low or normal risk-rated 20%, for moderated up to 10%, for credit export 10% of the sanction limit or the delegated power, whichever is lower. For credit card exporters, 20%. Okay, standby credit facilities. Okay, so what is this standby? Like a limit will be created as a standby. It is up to 20% of the sanction limit in case of low and normal risk rate accounts. In case of moderate risk rate accounts, up to 10%. For export, 10%. If it is gold card exports means 20%. And there should not be any ADO that is coexisting with this facility. Maximum of 2 times in a year. Okay, and that to not exceed 60 or 90 days at a time. The sanction limit should be enforced wherever standby credit is extended by the branches. It should not be expired and all. Remember, normally in low and normal risk, it has to be 20%. And if it is moderate means 10, export means again 10%, gold card export means 20%. No ad hoc should be there. Maximum of 2 times in a year for a period not exceeding 60 and 90 days at a time. 60 or 90 days. So these are the credit appraiser committees that are authorized to permit standby credit in respect of export credit up to Arrowhead CACs, including MSME, Sulabs, Power and all. Arrowhead CAC is the authority that if the accounts are up to moderate risk accounts. Above Arrowhead CACs, respective sanctioning authority up to their delegated power. Again, it has to be moderate risk rate. CAC of the board, they are for the high risk accounts. Then standby credit for capital expenditure of MSMEs. And the facility is extended in the form of term loans up to 25% of the original value of the existing plant and machinery, subject to a maximum of 25 lakhs. Remember, this is 25 and 25. Remember, like that. This is for in case of term loans, it is facility in the form of term loan. Okay, that is up to a 25. We will keep again a standby credit will be sanctioned and kept in the form of term loans, and that will be whatever is existing plant and machinery value, 25% of that, and it is to a maximum of 25 lakh. Margin shall be between 15 to 25%. Okay, of the cost of the, like again, even though it is sanctioned and kept as a standby credit, we have to disperse it, right? So whenever we want to disperse, we are supposed to take a margin, and margin will be 15 to 25%. Coming to ad hoc credit facility, it shall be normal scenario. How much we have to charge them, right? Whenever we are giving an ad hoc credit facilities, at least 2% higher than the stipulated for the regular credit facility. However, this is not applicable to ad hoc facilities that is given to export limit. Then no ad hoc credit or additional limit or single transaction limit facility can be permitted in any account for not more than 2 occasions. Okay, the facility can be permitted for a maximum period of 90 days only. Respective sanctioning authority can permit ad hoc within the tenability period as per their sanction. Circle head and above. So this ad hoc can be sanctioned by circle head and above. Then it has to be done can be done only for a maximum period of 90 days only. In respect account where the tenability is extended, ad hoc can be permitted only by the next higher authority during the extended tenability. That means the limit is expired, and if you're trying for a you applying like looking for an ad hoc facility, it has to be sanctioned by the next higher authority. Credit appraisal. In case of credit appraisal, general guidelines for aggregate credit limit of over rupees 20 lakhs, audited financial statements are to be obtained. Okay, so in case of credit facilities above 20 lakhs, audited financial statements are to be obtained. Okay, so non-individual borrowers enjoying aggregate exposure of 5 crore and above, they are supposed to give non-individual borrowers, they are supposed to give LEI code. What is LEI? Legal Entity Identifier Code. Okay, and there is a timeline stipulated for that. Above 25 crore and less than 50 crore, 34/2023 was the cutoff date. Above So non-individual borrowers above 25 and less than 50, it is 34/2023. Above, it was already over. Above 20, sorry, above 10 up to 25, it was the last 34/2024. And 5 crore and above up to 10. Now there is time till 34/2025. Okay, now however the departments or agencies of central and state governments like not PSUs and all shall be exempted from this provision. Also, we are discussing about the general guidelines, right? Whenever the exposure and the limits proposals are above 5 crore, a copy of the passport of the promoter or promoter director and guarantors are to be mandatorily obtained. Okay, if it is beyond 5. In case of account rated AA and above, financials of holding company and consolidated financials of the company has to be reviewed. Remember, if it is AA and above, and if it is rated A and below, financials of top companies, 5 companies of the group. Remember, top 5 companies of the group shall be reviewed along with the financials of the holding company and the consolidated financials of company. So once again, if the exposure is beyond 5, you are 5 crore, you are supposed to take the passport and all, a copy of the passport and all. So if it is rated AA and above, financials of the holding companies and the consolidated has to be obtained and reviewed. If it is A and below, top 5, and along with this holding company financials and consolidated financials. Then remember, again, in respect of new borrowers, project appraisal shall be applicable for 10 crore and above. Okay, new borrower means project appraisal has to be done, including infrastructure, whenever the project cost is beyond 10 crore. In case of existing, it's not beyond 10. In case of like existing means, okay, so if they are dealing with us for less than 3 years, and if they are internally rated as low and normal, or externally rated triple B or better means beyond 15 crore. Okay, then if they are dealing with us for more than 3 years and they are very good at the rating, very good at the rating means low risk or normal, or externally triple B and above means 20 crore and above. Okay, so if internally rated as moderate risk or externally rated BB and all means 10 crore and above. So remember, if it's a new customer means you're going for the project appraisal beyond 10 crore. Okay, so if it is a existing customer means first you have 2 classifications are there, basically whether they are internally what is a rating or it's a better rating or not. It's a better rating means low or normal, and or if it is externally rated triple B or above, if they are dealing with us for less than 3 years means 15 crore and above, more than 3 years means 20 crore and above, internally rated as moderate means 10 crore and above. Okay, then coming to the working capital assessment, just some ratio names. I'm not going too deep into it. Why? Because rarely one question used to come in the past 2-3 years, very rarely. Okay, so I'm not I'm not going deep into it. Working capital assessment, basically 3 methods are there. So turnover method, MPBF method, and cash budget method. Okay, so and we are analyzing the account. One method is ratio analysis. We are just discussing about some of the ratios. Net working capital means current asset minus current liabilities. Current ratio means current asset divided by current liabilities. Okay, in case of MPBS, we go for 1.33. In case of turnover, MPBF means maximum permissible bank finance method, 1.33, and in case of turnover method means 1.25. Then quick ratio is simple. From this current asset, we will reduce this inventory and prepaid expenses, and then we will go for the denominator as current liabilities. Profitability ratio means net profit NPAT divided by sales into 100. Simple. Out of your sales, how much is your profit? That is the profitability, right? So profit divided by sales into 100. Then tangible net worth, capital plus reserves minus accumulated loss, adjusted TNW, tangible net worth minus investment in subsidiaries. Then TOL is to TNW, term liabilities plus current liabilities, total outside liabilities. That will be your term liability. What are your total outside liabilities? Term liabilities plus current liabilities divided by TNW. Okay, then coming to conversion of limit, two-way conversion of limit from fund-based to non-fund-based limits and vice versa may be permitted subject to compliance of the following conditions. You can convert, okay, from non-fund-based to fund-based and vice versa in following conditions. One is non-fund-based limit, only letter of credit limits and advanced payment guarantee for purchase of raw materials may be converted into fund-based limits. Similarly, fund-based may be converted into non-fund-based for purchasing stocks only. Post conversion, both fund-based limits and non-fund-based limit shall be within the assets MPBF. Post shipment to pre-shipment is not permitted. That means PC to bills and not otherwise. Okay, remember, post shipment to pre-shipment is not permitted, and also secured should not be converted into clean limit. One-way conversion of limit from LC to BG for purchase of raw material may be permitted to beneficiaries such as PSU, sales, NSIs, and corporate externally rated AAA or AA if the margin is and all is properly maintained. Period of BG is within working capital cycle subject to maximum 1 year. Coming to PSB launch in 59 minutes. It's a digital platform which enables an MSME entrepreneur to apply and get in principle sanction for MSME Mudra and loans up to 5 crore in 59 minutes. Even retail loans, all housing, personal vehicle are also introduced. Online Shishu Mudra loans, it is digitalized. Even the new to bank customers can also apply for Shishu Mudra loans through this revamped package. Account aggregator functionality is also introduced for fetching of other bank account statements in case of new to bank customers. Through the account aggregator, we can fetch their other bank account statements also. Then straight through process STP of Shishu Mudra loan need minimum intervention from the branch. The system has the following capabilities like KYC validation, Udyam registration, certificate verification, eligibility checks based on the system eligibilities, end-to-end. It's a kind of end-to-end processing. and even it is digital document execution is happening. Key fact statement shall be sent to registered email ID of the borrower before execution of the loan documentation. What are the eligibilities? They should have a running active account with a bank for the last 6 months or other bank. If they're a new, whatever the customer should have a 6 months past active bank account. Joint accounts are not eligible under this process. In case of new to bank customer, applicant should not be enjoying any credit facility for business purpose from any other bank or financial institutions. In case of new to bank, okay, they should not be enjoying any credit facility for business purpose from any other bank or financial institutions. Only borrower with constitution, individual or proprietorship are eligible. There should not be any check return due to insufficient fund in last 6 months. There shall not be any overdue in the existing loan account. There should not be more than 3 check return in the last 6 months due to reasons other than insufficient fund. Borrowers should have URC, Udyam registration certificate, and the consumer CIBIL score for individual applicant or the proprietor or the promoter should be 700 and above. Okay, even the CAR under commercial segment without the score has to be obtained, and see for any other adverse remarks regarding the overdue, NPA, suit filed or return account shall not be considered. System will calculate the eligibility, and how they will calculate the eligibility? It is based on the average monthly balance in the SB of current account. Maximum eligible loan amount will be 4 times of average monthly balance of the last 6 months. We initially told, right, what is the eligibility? They should have a account for the past 6 months. Okay, so how will we see the eligibility amount? 4 times of the average 6-month balance, subject to a maximum 50,000, because it's Shishu, right? Shishu means up to 50,000. Kishore 5, Tarun up to 10. And if the customer is new to bank, we are supposed to do account statement analysis, that is to be done by account aggregator functionality. And also remember, this Shishu STP procedure loan will be given as a term loan only, that too for a period of 12 to 36 months. Then coming to the SED rating, it's 0 defect and 0 effect. Then what is this SED? Actually, it is about with 0 defect processes with 0 effect on environment. 0 defect process with 0 effect on environment. To get this certification, MSME units, they have to first apply online self-assessment through the website www.sed.org.in and register their details. There are 3 levels of certification. 3 levels of levels are there. First is level 1 bronze, level 2 silver, level 3 gold. Bronze, silver and gold. Level 1 bronze, level 2 silver, level 3 gold. Said rating parameter in MSME loan application NF998 we have to update. Then we, in case of SED, we are like when a customer is doing all this SED and all, we can give them some rate of interest and all. These concessions are valid up to 31/3/2026, and the SED details are supposed to be updated in the BAM 83 and SIM 2022 options. Under BAM 83, special beneficiary, SED concession beneficiary, all those things has to be given under SIM 822, customer ID, company details in that, MSME details, SED details, CERD certification level, SED ID, SED accreditation details, expiry of the SED accreditation, all those things has to be submitted, and said accreditation expiry period is normally 3 years. And what are the concessions permitted? In two cases, one is ROI concession and processing charge concession. Okay, so in case of ROI, after giving the further concession, it should never be less than the RLLR. Then processing charge should not be more than 75% of the applicable charges. Now we will discuss about the GenSummer portal. It is also known as National Portal. It is developed by the Online PSB Loans Limited. Okay, then the URL is, we are all aware, www.gensummer.in. 13 schemes of our banks are eligible to be routed through GenSummer portal. Here in the first slide, we discussed one thing about GenSummer portal. Hope you people might be remembering. That is the rejection of loans that is coming under GenSummer portal branch don't have the power. It has to be done by the next higher authority. So why is this GenSummer portal has come into picture? It is to reach more into public credit linked government schemes and all, streamlining the delivery process by a proper portal and all. Which are the MSME loans that can be routed through GenSummer? Pradhan Mantri Mudra Yojana, Weavers Mudra, Stand Up India, National Urban Livelihood Mission. We initially also we discussed, if any proposals are to be rejected under the GenSummer, it has to be done by the next higher authority. And discuss about the takeover norms. It is by 382/2023 and 115/2024. Definition of a takeover in case of sole banking. Simple. Our bank is taking over any loan account from another bank. We call it as a takeover. Multiple banking. Bank take over the share of another bank and replaces that bank completely. Consortium. Fresh entry into the consortium where bank replaces an existing member of a consortium by taking over its share. If somebody is closing the account already and coming to us, whether we will consider their own sources, if they're closing and coming, whether we will consider it as a takeover. If they are approaching after 3 months, we won't consider it as a takeover. But if they are approaching within 3 months, we will be considering it as a takeover. What 3 months? Actually, once somebody is closing an account in another bank and they are approaching to us with their own fund. They are closing with their own funds means whether it will be coming under takeover, that will be like it will be coming under takeover if it is less than 3 months. In case of consortium, if bank is already having an exposure and if our bank takes over an entire share of the existing consortium member, that means it will be increasing our own share. We are already having an exposure under the consortium. Now, somebody is leaving in the consortium, some other member, and we are taking over that share means the consortium. The same shall not be treated as takeover, subject to external rating BBB and above. There is no downgradation in the external rating. In the past 1 year, operating profit is there in the past 3 years. Account is not SMA2 or should not be appeared in the SMA2 in the past 18 months. Okay, SMA2 or not appeared in the SMA2 in the past 18 months as per CRIL report. Whenever the CRIL report is not applicable, we can take it from the commercial CIR or CMR. Account is not restructured. In all the other cases, it will be considered as takeover. In case of takeover compliances, account should be minimum 1 year old with the transfer bank. Standard account should during the previous 1 year. The account should not be restructured. Account should not have appeared in your SMA2 during last 18 months. The unit profit commensurate with the profit earned by similar units in general. Then we have to get the sanction memo, certificate of limit or liability or overdue, security charge from statutory audit of the borrower. Also, we have to see what are the reasons why the takeover is happening. In respect of manufacturing unit, the unit should be minimum 1 year old and should have accomplished DCCO at least 6 months prior to the application of takeover and should have satisfactory repayment track record for at least 6 months. Actually, in the past 5 years, shifting of accounts from other bank shall not be more than one occasion. Okay, if it is more than one occasion, delegated sanctioning authority may permit by properly ascertaining what is the reason. Further, the gap to last switchover should be minimum 1 year. This stipulation of 1 year can be waived in respect of borrowers rated as low risk or externally rated as A and above and has completed a minimum period of 6 months with the transferor bank. In case of MSME accounts, double B and above only can be taken over. In case of accounts other than MSME, external rated triple B or better shall be considered. In case of takeover without enhancement, remember if we are going for a takeover and there is no enhancement, whatever the collateral offered to the previous lender shall be passed on to the bank for the exposure to be taken over. Okay, in case of takeover without enhancement, the collateral shall be taken over, but if it cannot be assisted, why means it may not be SURFACE complied and all, then we may permit acceptance of alternate securities with proper and justifiable reasons. The extent there should not be any dilution of security or reduction in margin should not occur on the account of takeover. Securities to be revalued at the time of takeover of account as per the extent guidelines and realizable value to be ascertained. Normally, with enhancement also, there shall not be any substitution or acceptance. Okay, we told if it is cannot be complied at all, in case where the securities encoded by the transferor bank does not qualify as valid as per our bank policy. For example, plan approval is not there. We want plan approval, right? So substitution or acceptance of alternate security in the form of land and building, our own deposit, NSCs, KVPs, and insurance policy shall be permitted by CGM, GM, HOCACs, and above authorities. The securities we are taking from other banks should be SURFACE compliant with proper mortgageability and marketability. However, dilution of security or reduction margin shall not be permitted. In case of takeover with enhancement, the same may be permitted with maintenance of security coverage in the form of land and building, our own bank deposits, NSCs, KVPs, and insurance policies not being less than 50% of the entire exposure. We discussed also security has to be SURFACE properly demarcated, non-agriculture, SURFACE compliant, vacant land can be considered for calculation. Okay, value of the vacant land shall not be more than 50% of the total collateral security taken for the facility. A normal case of enhancement, we'll consider up to 25%. If it is more percentage proposal to be sanctioned by next higher authority. But in HO means sanctioning authority at HO means up to the delegated powers irrespective of the percentage of enhancement. And if it is while taking over, if it is for existing credit facilities to be taken over and fresh term loans are proposed, and that too for expansion of the existing means, such term loans shall be kept out of the purview of stipulation of sanction by authority. Remaining repayment period shall not be extended beyond the original repayment period permitted by the transferred bank. Then audited balance sheet for the previous 3 years shall be obtained and analyzed. In respect of corporates, audited financial statements filed with ROC to be verified for the previous 3 years. Audited financial statements should not be older than 9 months. Then, where latest ABS is not available, provisional financial statement for concluding year and the last immediate quarter results duly certified by auditors shall be obtained. Now we'll discuss about some few MSME schemes and products. We'll discuss about margin money loan scheme. Okay, so we'll discuss about margin money loan scheme. So quantum up to 4.5 lakhs per unit can be extended under refinance scheme of NMDFC. Margin mandatorily it has to be minimum 10% by way of its own funds. Present applicability Bhubaneswar, Ahmedabad, Jaipur, Bangalore, Hubli, Bangalore, Manipal circles only. The nature of facility, primary facility may be considered as term loan or working capital or even composite loan from our bank under the specified schemes. However, this margin money facility under the subject scheme shall be extended in the form of term loan only. Simple. Actually, this is a margin money loan scheme, and this is for giving us margin, for giving the party margin, and this maximum amount is 1.5 lakhs. So there has to be base first primary loan has to be there. Na? It can be as a term loan, working capital, or it can be a composite also. But this particular loan will be sanctioned in the form of term loan only. Rate of interest is fixed rate 6%. Then this fixed rate of 6% shall be charged from the date of receipt of refinance from NMDFC till such time from the date of sanction. Extend ROI of the bank shall be applicable under the scheme. Okay, normally we are planning to give us 6%, but this 6% will be applicable from the date of refinance from the NMDFC till that date. Rate of interest, our normal rate of interest will be applicable. Okay, so rate of interest to be paid by the bank to NMDFC will be 3.5%, but the bank will charge the customer 6%. Got it, right? So repayment period is maximum 5 years. Moratorium period is same tenor as permitted under the term loan sanctioned as primary facility. Tenor will be our bank is supposed to repay the loan over a period of 8 years after the 9 months of disbursement of funds. 3 months, 8 years after the 9 months of disbursement, 3 months on account of utilization, and 6 months on account of moratorium period. And this refinance amount shall be repaid to the NMDFC by the bank irrespective of the asset classification and all. Now we'll discuss about one of a very important scheme, that is Canara MSME Star. This was a erstwhile Canara MSME CAP scheme. Okay, so the target group here is micro, small, medium enterprises, MSME enterprises, both manufacturing and services, where hospitals, education institutions, self-help group, and joint liability groups are excluded. What is the eligibility here? Individuals, partnership firms, other than partnership firms where HUF is a partner, company or traders or businessmen or professional or self-employed persons or LLPs or proprietary firms. The scheme shall be applicable for accounts risk rated up to moderate risk only. Eligibility: loan against mortgage of applicable accepted land or land and building located in metro, urban, semi-urban properties allotted by government authorities or semi-government authorities, agencies like Industrial Development Authority, Small Scale Development Authority, Special Economic Zones, industry estate like textile parks, irrespective of location, and authorized by state or central government, either leasehold or freehold, subject to different conditions. Approved financial securities. Okay, so as it is, MSME Star, it is this updated version of the earlier Canara MSME CAP. What is CAP? Credit against property. So there has to be, when we are revamping a proposal, this was about the property, right? So here also for the MSME Star, mortgage has to be there. Okay, so accepted land or land and building located in metro, urban, semi-urban area, and the property allotted by this special economic zone, industrial estates like textile parks, etc. Then approved financial securities. What is the nature of the facility? It has to be working capital, secured OD, term loan can be also given. Loan quantum will be above 10 lakh. Margin will be 20% in case of term loan and working capital, 15% in case of non-fund based limits. Okay, property in the name of foreign close relatives can be also accepted. Father, mother, spouse, brother, sister, son and daughter, provided they stand as guarantors. Property in the name of minors shall be avoided. Property in the name of following relatives of the promoters can be also accepted, provided they stand as guarantors: brother-in-law, sister-in-law, mother-in-law, father-in-law, daughter-in-law, and son-in-law. Security comfort. Total security for reckoning security comfort under the scheme shall be 100% or more of the proposed exposure in the form of primary and collateral put together. Okay, accepted securities 100% of the surrender value. Thereafter, a minimum 50%, which is not secured by way of approved securities, shall be by way of residential or commercial properties. Remember, it has to be 100% in the form of primary and collateral put together. Okay, 100%. If it approved securities means we can take it as, if it is other than that, 50% shall be by way of residential or commercial properties. Okay, remaining exposure not backed by approved properties, approved securities or residential or commercial properties can be by way of primary securities in the form of land, land and building, vacant land, or industrial properties. However, remember, vacant land can be only accepted up to 25% of the stipulated security comfort. The same thing when we took for, you might be remembering, right? For CGTMSC, when we thought of waiver of CGTMSC, in case of new borrowers, we can accept vacant land same way up to a maximum extent of 25% of the stipulated security comfort. Here also, vacant land can be accepted 25%. Okay, 100%. Remember, 100% has to be there. 50%, if it is other than the accepted security, 50% has to be by way of residential or commercial properties. Remaining can be in the form of land and building, vacant land or industrial properties. Vacant land can be only maximum 25%. Now we'll discuss about the another scheme, that is Canara MSME contractor. Here it is to provide working capital assistance in the form of running limit. Can be given as secured ODs, FLCs, BGs for working capital needs, and term loan for purchase of brand new equipment or office premises to the existing and prospective eligible contractors or subcontractors. Eligibility: new or existing MSMEs engaged in contractor or subcontractor activity the scheme shall be applicable for accounts risk rated up to moderate risk only. Concerns belonging to a common group are also eligible. Clients financed under the scheme to confine their dealings with our bank. New clients or units whose market report and prospects are satisfactorily subject to their dealings confined to our bank. Existing clients should have satisfactory bank dealings with their existing bankers. Again, it is up to moderate risk. There should be a contractor, subcontractor, proprietorship, partnership, private and public limited companies. Concerns belonging to a common group are also eligible. Clients financed under the scheme to confine their entire dealings with our bank. Quantum above 25 lakhs. Need-based finance on credit assessment or 9 times of tangible net worth, whichever is lower or cash flow projected. Term loan to the maximum of 10 crore is also permissible. For loans above 2 crore, valuation shall be carried out by 2 independent panel valuers and lease should be taken into consideration. Repayment: working capital means tenability has to be 12 months. Term loan means 5 years, inclusive of holiday period. Term loan, 5 years we told, if it is for other than construction. If it is with construction means 7 years, inclusive of holiday period, if availed for the purpose of construction. We also discussed earlier also valuation from 2 independent valuers for loans above 2 crore. Then TOL, TNW can be accepted up to 5:1 for manufacturing units, and other cases 7:1. Margin working capital nil. Term loan 20%. Non-fund based 20. Stock and book debt statements has to be taken quarterly. Minimum collateral requirement 100%. Okay, out of which 50% shall be by way of residential or commercial properties. Vacant land 25%. In case of value of industrial building and vacant land property should not exceed 50% of the minimum collateral comfort. Remember, 100% has to be collateral comfort. 50% minimum has to be by residential or commercial properties. Vacant land maximum 25%. Vacant land plus industrial land and building should not exceed 50%. And the one more scheme, Canara Mahila Vikas scheme, to meet business related needs, including purchase or construction of business premises, machinery, equipment, vehicle and working capital requirement of women under micro, small and medium enterprises including retail traders, enterprise owned by women complying with the MSME guidelines, then individuals, proprietorship concerns, partnership firms, LLPs, corporate bodies owned and managed by women. In case of any partnership bodies, LLPs, private or public limited companies, partners capital or share capital of minimum 51% with women shall be considered as units owned by women. Business entities that have completed 2 years of business operations and having a satisfactory track record with the existing banker for last 2 years. Even new units can be accepted based on subject to satisfactory market opinion and all. Minimum CIC should be 650. Loans up to moderate risk. Remember, all these schemes normally it will be moderate, okay, moderate risk. When we think of star, quantum above 10 lakhs, margin, working capital means 20%, term loan means 25%, sorry, 20%. Repayment in case of term loan, maximum 84 months, including moratorium. What was for the contractors, 5 and 7 years. If construction is involved, it was 7. Normally, otherwise, it is 5 years. Here, Mahila Vikas, 84 months. And here, anytime, if the security comfort is less than 100%, CGTMSC coverage has to be obtained. It's kind of hybrid model. Minimum collateral security for low risk rated account, it should be 25% or above. Normal means 50% or above. Moderate means it shall be 75% or above. 50% of the minimum stipulated collateral security comfort shall be obtained by way of mortgage of residential or commercial land and building only. Even the security comfort may comprise of vacant land. Again, same like all the times we discussed, subject to a maximum of 25% of the stipulated security comfort. Remember, for low risk, it can be 25%, normal 50, moderate has to be 75%. And whatever all the scenarios, stipulated security comfort, 50% has to be in the form of residential and commercial land and building. Another one scheme, Canpals Smart Professional Scheme. As the name indicates, it's for the professionals, architects, engineers, valuers, management or financial consultants, chartered accountants, cost accountants, company secretary, and registered medical doctors. Professions should have minimum 2 years of experience in their respective profession. Existing customers with satisfactory track record, new customers subject to satisfactory OPL from their existing bankers, individuals, proprietorship accounts, partnership concerns, private limited companies, LLPs, they're all eligible. The applicant should be holding a valid certificate or license for carrying out respective profession and should be a registered member of a registered respective professional association, board or body, etc. The existing professional firm should be an assessee under income tax and shall have a net annual income of rupees 2 lakhs as per the latest ITR. It should have a net annual income of 2 lakhs. The scheme shall be applicable again, same like all the previous scheme we discussed, moderate risk, age 25 to 60, nature of the facility, term loan or working capital, minimum about 10 lakhs, term loan 25% of the hard cost of the project cost, margin, okay. Working capital, it is nil. Non-fund based has to be 25%. Repayment, working capital, normally the tenability is for 1 year, maximum of 25 lakhs, term loan to a maximum of 10 years, inclusive of repayment holiday and moratorium period based on cash flows. Canada MSME textile scheme. This is also again applicable for accounts rated up to moderate risk. Ineligible to finance under scheme. Second-hand missionaries are not eligible. Service sector shall not be considered for financing. Nature of the facility, working capital, term loan, both fund-based and non-fund-based. Quantum above 10 lakhs. Margin for working capital 25%. Term loan 25%. Then area-specific theme for financing MSMEs engaged in both ceramic and vitrified tile industries in Ahmedabad circle. Nature of facility. It can be working capital, term loans, and non-fund based facilities. Quantum will be above rupees 10 lakhs. Margin term loan will be 25%. Working capital, again, the margin will be 25% against the stock and 30% against book debts. In case of non-fund based, it will be 20%. Running account, it will be the product code is 2000. That means OD, and the term loan 766. Now, this is a very recent scheme. This you all please remember, Canada eGST. Very recently launched. This is a target group will be existing current account holders for a minimum period of 12 months, categorized as MSME, having a valid Udyam registration certificate and GST. Okay, that is eGST. As it is E, you understood, right? That happens, everything happens end to end online. Okay, the target group is existing current account holders for a minimum period of 12 months, not having any active business loans from any other banks or financial institutions, existing MSME term loan borrower of our bank without having working capital limit, and total MSME exposure should not be more than 10 lakhs. Okay, they should not have any other working capital limit with us. Okay, so they should not have any other business loans from any other banks and all. Overall exposure, including working capital under this scheme, should be within the limit of maximum 10 lakh. Satisfactory repayment record in case of existing term loan accounts. There should not be overdue on the date of application, and that should not be appeared in the SMA2 or NPS status in the last 12 months. The purpose is to provide fund-based working capital finance up to 10 lakhs to GST registered MSMEs through digital mode up to sanction stage, straight through process and disbursement assistant mode. Eligibility: individual, proprietorship firm are eligible under the scheme. Valid Udyam registration certificate and will be validated digitally. Aadhaar in the email ID should be there. Individual or promoter having age between 21 to 65 years. Applicant should have minimum business vintage and active current account for the past 12 months. GST registration certificate is mandatory under the scheme, and minimum 12 months GST return should be available. Remember, GST registration is mandatory and minimum 12 months GST return should be available, and they should have a proper current account for the past 12 months. The latest GST return should not be older than 1 month and 1 quarter from the preceding month. In case of monthly filing, means it should not be older than 1 month. In case of quarterly, it means it should not be older than last quarter. Applicants should not have active business loans with any bank or financial institutions, and the same shall be checked digitally through the CAR and CBOAs. Existing SME term loan borrowers are also eligible, provided they are not having any working capital limit with us. PAN-based exposure of the entity or promoter under Canada eGST shall not exceed maximum limit stipulated under the scheme, that is rupees 10 lakh. And number of checks returned due to insufficient fund reason, or ECS or NACS bounce in the operating account in the last 12 months should not exceed more than 4 times. For insufficiency of the month in the past 1 year, it should not have been returned for more than 4 times. Loan quantum, minimum 1 lakh, maximum 10 lakhs. Margin for stocks 25%, book debt 30%. At least 75% of the turnover should have been routed through our bank current account. Regarding Canara, we just discussed about the EGST. Canara GST loan amount up to 10 crore can be permitted by the respective sanctioning authority. Beyond 10 crore, up to 20 crore shall be permitted by GM SME business unit. Then further EDCAC can be do beyond 20 crore, and any variation in the policy has to be placed before the EDCAC. In case of Canara GST, MSME, it has to be manufacturing, both services are eligible. Nature of facility, only working capital will be provided. In case of Canara GST, it should not be less than moderate. Accounts rated up to moderate risk will be eligible. Individuals, proprietorship, partnership, LLPs, companies, new customers with minimum business operation of 6 months are eligible. GST return of minimum 6 months should be available. At least 75% of the turnover reflected in GST return should have been routed through the bank account. Quantum minimum 10 lakh, maximum 20 crore. Okay, and EDCAC and above can permit beyond 20 also. Margin nil. Stock statement and unit inspection half yearly. Stock audit waived. Pen lenders will be charged if the turnover passed through the account is less than 75% of the turnover as per the GST return. Security comfort, 75% of the loan amount in form of immovable properties, land or land and building. Circle head and above empowered to sanction under this scheme to manufacturing units with security comfort between 50 to 75. Area specific scheme for financing processors or traders engaged in marble and granite. This is for financing marble, granite, mineral and mineral power units and all. This is applicable pan-India with present applicability in Jaipur circle. So this is to provide credit for working capital facility, term loan requirements to this kind of units. This all MSME units engaged in processing of trading of marble, granites, mineral and mineral power units. Nature both working capital and term loans. Quantum above 10 lakhs. Then Canara MSME credit card. Canara MSME credit card shall be issued to individuals or proprietorship firms, units classified as MSME. New or existing MSME units enjoying working capital limit in the nature of CC or OD up to 50 lakhs. Borrowers existing account should not be in SMA 1 and SMA 2 position or limit in expired status under provisional extension at the time of issuance of the Canara MSME credit card. Canara MSME credit card shall be issued to fund-based working capital facility for business purpose only and can be utilized within the assessed limit. The card variant for working capital up to 10 lakhs, Rupee Platinum card variant. For working capital above 10 lakh, Rupee Select. Okay, card variant features of card. Linking RuPay card on UPI platform can be done. Accident insurance coverage shall be provided by NPCI. Loan charges will be there. Reward points will be there. Validity of the card 5 years. Canra MSME in an area-specific scheme for financing MSMEs engaged or proposed to engage in hotel industries. Nature of the facility, working capital and term loan. Loan quantum minimum 10 lakhs, maximum 25 crore for working capital. Working minimum quantum is 5 crore. Margin or term loan with 20%. Non-fund based is 15%. Repayment, working capital turnable for 1 year. Term loan, repayment period up to a maximum of 10 years, including moratorium. Maximum moratorium 2 years. Canra MSME startup. This is working capital or term loan. Loan quantum minimum about 10 lakhs, maximum 10 crore. Margin term loan 20% of the project cost. Working capital against stock and book debts 20%. Non-fund based 15%. Working capital 1 year. Term loan maximum repayment shall be done 10 years, including maximum moratorium period of 36 months. Interest to be repaid as and when due. And then coming to PM Vishwakarma scheme, this is working capital demand loan in 2 tranches. First loan tranche, maximum 1 lakh. Second loan, maximum up to 2 lakhs. Total 3 lakhs will be there. First tranche to be repaid in 18 months. Second tranche to be repaid in 30 months. So by this, we have come to the end of the session. PPT will be shared. And the Krishnan.
Yes, madam.
Sir, I think we have completed the sessions.
Yeah. I have just enabled the chat so that if anybody wants to get any clarification,
I'll share the PPTs. I think people are asking for the PPTs. We'll definitely share the PPT.
Yeah, we will quickly have the question session for 5-10 minutes. So that, madam also can wind up the sessions. So PPT, you need not worry about PPT. It will be shared by tonight. Anything else? If you have noted any doubts, please ask. So today with this session, we are completing MSME. We will be sharing the PowerPoint where you can, maybe you would have felt it was a bit fast. So you can watch our video along with PPT, you will be able to understand better. If you once watch along with PPT, you may be able to get the things whatever madam has discussed. Tomorrow class I have not yet scheduled. I will discuss with Ravi Kumar or any other faculty because throughout this week classes are going for pre-promotion training. So almost all the faculties are engaged in pre-promotion training. So they will be almost exhausted. So not many people will be able to take class. Anyway, I will check up with Mr. Ravi Kumar. Sir, any question related to examination point of view, please ask. Abbreviation for what, sir? Govind, Mr. Govind. Somebody is asking abbreviation, please. Madam, one person has asked inside collateral MSME star scheme.
So collateral in MSME star scheme, it is mentioned in that slide. I'll just go through that and go back again. Yeah, see, we can take a security comfort of 100 percentage. Actually, yeah. So minimum has to be 50 percentage by way of approved securities, and the 25 percentage has to be by vacant land. It is clearly mentioned in this slide, sir. You can go through this slide also regarding the security comfort for regarding this star scheme. Someone was asking about uh, DCCO. I have mentioned about it in the chat. It is date of commencement of commercial operations. Okay, then this NMFDCs, NMDFCs, National Minorities Development and Finance Corporation.
Taking over GST, Canada GST, whether stock audit is required.
Sir, take over the stock audit is there, sir. I will again go through that
Just
slide.
If it will take time.
Because regarding the takeover stock audit guidelines are there, that is also mentioned in the slide. I think I've skipped it at that time. Here also it is clearly mentioned. See, stock audit in case of a takeover, it has to be done as a pre-release condition, subject with some exceptions like for contractor OD and secured OD, where stock may not be available. Respective sanctioning authority may permit waiver of stock audit as a pre-release condition, and working capital below 10 crore, stock audit may be waived by respective sanctioning authority from the transfer bank. If stock audit report is available less than 6 months, in such cases, stock audit statement copies submitted to the earlier bank for the past 3 months shall be obtained and verified. Working capital limit up to 3 crore, where stock audit report from the transfer bank is not available, or stock audit report available with the transfer bank is more than 6 months old, then they may permit as a release condition, subject to our 3 months this stock statement copies are available. This is a general guidelines for all the schemes. Symbol, actually, if it is stock is not available means it can be waived, and if it is up to less than 10, it can be waived if it is a recent stock audit report is available means. If it is also at that, if it is not there means stock statement copies has to be obtained.
Takeover customer wants to change security. That can be done.
Yes, that can be done. That also, if it is changing, it should not, there should not be any dilution.
Yeah. Okay. No, sir, no such a full set of MCQ. Probably online test, the team which is going to conduct online test, they may be preparing. So we will let you know in the next sessions. So, shall we wind up, madam?
Yes, sir. Yes, sir. We will.
Yeah. For the present, we will wind up. Any questions, we will get back to you.
Yes, sir. Definitely. We can, any, like, I hope my number will be available. It can be, I'm available, sir. can message, and I'm
Yeah.
okay with that.
Thank you, madam.
Thank you so much.
Thank
Thank you,
you
sir.
for your
Thank you.
time. Thank you, friends. We'll wind up the session. I will get, if possible, I will get a session tomorrow. Is depending upon the availability of other faculties, because all are engaged fully tightly for both PPTs. There are two PPTs this week and next week, and they are hiring almost all the faculties. So let me try to get somebody. Thank you. Agree by Ravi. Sure, I'll take up. Thank you, ma'am.
Thank you, sir. Thank you.
Thank you. Good night. Good night, all of you.
Good night. Thank you, sir. Shall I log off, sir?
Yeah, you can log. Yes, sir. More topics by Ravi. That can be done. Only thing is availability. He is already fully engaged in regular STC session, because being a faculty, he is regularly engaged. And if he is taking class for nearly 4 hours during the daytime, yes, due to want of time, she has skipped whatever important latest she has covered in the session. Yes, sir. I will get it uploaded today.